Hello everyone, it's Friday, July 18. Today we're closely examining the euro and the British pound charts to gauge potential market movements. The euro remained under pressure throughout the first half of yesterday's session. With no major events or unexpected data releases, market sentiment was largely shaped by familiar forces. Inflation figures from the euro area aligned with forecasts. Headline inflation held steady at 2% year-on-year in June, while core inflation printed at 2.3%. These figures suggest that consumer prices are nearing the European Central Bank's target. The ECB's current policy trajectory continues to restrain inflation, even despite loosening financial conditions. Still, uncertainty lingers over the central bank's next move. A pause in rate cuts is widely anticipated, but this alone offers little support to the euro. As the charts show, the euro-dollar pair remains under pressure. Further weakness followed a batch of stronger-than-expected US retail sales data released yesterday, which helped lift the greenback and push the euro to a fresh one-month low. As for the British pound, the currency largely ignored statistics and entered a mild correction, recovering slightly from the sharp sell-off that began on July 1. UK labour market figures were disappointing. The unemployment rate ticked up from 4.6% to 4.7%, and the number of Britons claiming unemployment benefits rose by 26,000, well above the forecast of 18,000. Despite these, sterling managed to hold steady within a sideways range. Now let's turn to today's macroeconomic calendar. It includes data on German producer prices. The PPI is expected to show no change for June, following a 0.2% decline in May. Traders may also watch for Eurozone's current account data and a speech by Bundesbank President Joachim Nagel. Recently, Nagel has signaled that current conditions justify a pause in interest rate cuts, suggesting that he will likely advocate for a cautious approach to further monetary easing, potentially offering some support to the euro. In the United States, key data points on the radar include building permits and housing starts, along with the University of Michigan's survey results on consumer sentiment and inflation expectations. The dollar is likely to strengthening only if the data significantly outperforms expectations. Otherwise, markets may continue to edge higher in a modest bullish correction within the broader sideways trend and has recently emerged. Turning to technical analysis, the EUR-USD chart indicates that a drop followed by a false breakout at 1.1598 and 1562 could offer solid buying opportunities, with an initial upside target at 1654. If the price breaks through and consolidates about this level, the euro could climb to 1691, potentially reaching 1.1721. At this mark, I would recommend going short on the rebound in anticipation of a 25-30 pip move. Short entries at 1691 and 1654 would also be appropriate in case of a false breakout at those levels. In a bearish scenario, if the pair hits a new one-week low, it would make sense to go long on a rebound around 1.1511, targeting an intraday correction of 35-40 pips. As for the British pound, the setup remains similar. Long positions could be considered near the middle of the sideways range around 1.3406. or closer to the lower boundary near 3368 in the event of a false breakout. Alternatively, a rebound from the 33-35 area would also offer a decent opportunity to go long, targeting an intraday correction of 25-30 pips. Short positions look more attractive on a false breakout at 34.42 or 34.81. going short on the rebound would be relevant at 1.3552, aiming for a 35.40 pip move. However, there are currently no strong catalysts for such an aggressive upward move, as today's macroeconomic calendar is light on key data from the UK. Good luck to everyone. Have a nice weekend.